All right, as we move through the first quarter of 2025, global investment trends have been shaped by a variety of factors, including economic recovery, shifting market dynamics, and emerging technological innovations. Investors are closely watching economic indicators, geopolitical events, and the ongoing evolution of industries like AI, renewable energy, and digital finance. But we'll get a review now of most of the markets that we track right here in investment, how that's been looking. And join us for this conversation, we have Mr. Benga Magbagbeola, is the MD Sycamore Investment and Asset Management Limited. It's great to have you on the show. Good afternoon, Ladi. So, looking at the first quarter of 2025, it's been quite dramatic, so far. What we've seen, happen in the global space, and even back here, and looking at our economic indicators, we've seen major changes with the likes of inflation, so far with the rebase numbers. So, talk to me about how you've seen investment, generally the first quarter of 2025. Do you think investors got it good, in this quarter?
Yeah. Great question, Ladi. So, I mean, from where I stand, just like you said, the investment environment has been very volatile. Volatility is the word you can use to actually summarize it. So, yeah, take the global investment space, for example, the election of Donald Trump, and there was a lot of expectation in the markets, in the U.S. markets, coming into 2025. And what we've seen, in contrast, a bit in the U.S. market, is, heightened, volatility on the back of, the trade policies that have been coming out. That's impacting the markets. The U.S. market year to date has lost about 2%, compared to how the performance was last year. Gold is in demand and crossed $3,000 recently, which also indicates, the level of uncertainty and, up and down movements in prices. Again, there's been moving around of assets, from jurisdiction, for example, reallocation of assets from the U.S. markets to Asia, for example, where we're seeing upticks in the technology space, the likes of the story around DeepSeek, and the improvements they're coming into the market with. So it's been a bit fragmented in global space, but if you look at the Nigerian market, things have been more positive, if I would say. Positive in the sense that this is Q1 and things started on a positive note, generally speaking. The stock market here, if you take that gauge, is positive about 2.5%, even though it was higher, and some of that got eroded.
Yeah, March came in heavy.
Yeah, March came in. I mean, you could argue that there was a bit of profit taking because prices had gone up. Again, I would like to say that there was a bit of, how do I say? So the transaction volumes were also impacted, which contributed to the price that came down. But I mean, in Nigeria, aside from the stock market, general investment environment has been tracking the reforms that have been going on. So reforms that we're seeing in the agri space, for example, you see that there are investments that are coming into that particular space. We heard of Brazilian firms coming in to Niger states to invest in ranches, which is pretty significant, and that will stimulate activity in our agri space generally.
And I see talk about investment in drip line, technology to actually help the farmers with irrigation.
Absolutely. So all in all, I mean, there's been headwinds in Nigeria with regards to how the risk around how inflation is going to trend. But generally, aside from the rebasing, we expected that inflation would trend lower on the back of base effects. But, there's been a rebasing, and we're also seeing those numbers coming down.
Because even without the rebasing,
there was an expectation that
things still tending downward.
That's correct. And with that, we're also seeing, interest rates also tempering a bit. The last MPC saw, a hold in the decision, so which also indicates how the CBN is looking at things and how interest rates will trend.
But, from what I've seen so far, it's like central bankers, globally, they have a big headache, right now. Bringing it down here, now, looking at the interest rate and inflation level, we're seeing the inflation level is lower, than the interest rate. So we're having positive
real return.
Real return, and that's on the back of rebasing. So it's quite confusing.
It's tricky.
It's tricky. You're like, are you in profit or not? At this point.
Yeah, I mean, this is statistical numbers that have come out. In time, I think when the numbers continue to trickle in, we're going to see a trend, which is probably more important than just the January number and February that came out. The trend will actually tell where things actually stand, how much the pace on inflation, how that's reducing. So I think that's more important going forward. So yeah, that's my take on the.
All right, so with what we're seeing, playing out in the global scene, definitely before Trump, took office, 2.0, definitely there's some asset classes that have done really well, up to him taking up office. But we've seen those asset classes now tend downward. Do you think, with what we're seeing now with fears of recession? Economists talking about, the whole tariff issues. You see that, getting into the Nigerian market and affecting us negatively?
Well, I mean, when the U.S. market sneezes, the global markets catch a cold. So we're not completely insulated, but we have our own nuances in Nigeria. The Nigeria market, like I said, equities have been largely positive year to date. Even though interest rates seem to be trending downwards, they're still, from an investor point of view, they're still attractive for investment. Other asset classes are also coming up, given the risk around our foreign exchange, USD-denominated investments, which is also, catching some steam, and investors are also trooping to that. And we would expect that we'll see more structured products to try and, weather the volatile environment and take advantage of opportunities around these asset classes. So I think Nigeria is more nuanced, but obviously, the largest economy in the world, if things start to slow down, obviously, we would see an effect in Nigeria.
So, with what you've seen so far, play out in the first quarter, looking at the Nigerian market, what key trends have you, seen so far? Right.
So, I mentioned in the Nigeria market, in terms of investment, the trend we're looking at, we're seeing more structured products. We're seeing more interest in foreign-denominated currency assets. We're seeing interest in, fixed income investments that take advantage of high and elevated interest rates. We're also seeing alternative assets, interest in alternative assets like crypto. Crypto, for example, which is an interesting topic, is an area that, even the Securities and Exchange Commission is, supporting and actually looking into to supervise and also to guide, initiatives that are coming out there. Obviously, recently they approved a couple of local exchanges, which indicates how they're also thinking about this. For us at Sycamore, the environment generally poses for us an opportunity, because new asset classes, interest in structured products have informed us to come to the market with products that actually try to address the concerns of investors and also take advantage of, these opportunities with diversifying assets in your portfolio. We've made it simplified. We have, we're a technology-driven wealth solution provider, right? So we've made it simplified. Investors can actually do things themselves via our mobile app and our multi-currency feature on our app. It helps you to actually invest both in Naira and in other currencies and hold your assets as well. So these are some things that Sycamore has actually, this is a view that Sycamore has taken to take advantage of the dynamic space.
And I'm talking about, apps and, trading now. We're seeing a huge shift, at this point. We're seeing investors, they love to, trade at their own,
convenience.
Convenience. You just go on your phone, you buy, you sell.
That's correct.
But, looking at the market here, there's still that issue about settlement time. In your view, what do you think, the regulator and, those in charge should be looking at, to bring down that transaction time so that, because we see the youths, they love to trade.
Correct.
The
US
market,
yeah.
the US market, because it's boom, boom,
yeah.
Especially with crypto.
Especially with crypto.
Once you sell, it's sold.
It settles,
you
yes.
get the fund,
yes.
and you're able to move on.
Exactly.
So how are you seeing all of that play out?
Yeah, that's an interesting question, Laddie. So, for crypto, just like you said, you literally execute and you see your assets all settled in real time. And that's the innovation that comes with digital and crypto generally, blockchain technology. I see, locally speaking, I think that, the regulators they're a bit forward thinking from what I see. They probably need to do more and be more aggressive, but I mean, the regime I see at the exchange right now is actually encouraging, crypto platforms that they approved in principle recently. That indicates to me that they're actually looking at this closely. And obviously they see how things work on the crypto space, and will be interested to see how, that helps to develop the local markets in terms of equities and local denominated assets. I think that, for example, what you mentioned about settlement timeline is also very important. It's not just the SEC, it's also other platforms, like the NGX and other exchanges that we have. They also have a role to play in shaping the rules that help investors to actually, do more investing, create more liquidity in the market. We're in the market and in the lookout for this, also engaging with the regulators to try and, design our products to help investors enjoy these types of innovation as well.
Right, and looking into the remaining quarters, what are you seeing, coming up that will actually shape, the way investors interact with investments here?
Well, I think the last question actually even leads to what you just said. For me, I think technology is, you really can't do it with technology at this point. AI actually deserves a mention. AI is all over the news.
We can't have any conversation without AI.
We can't have any conversation without AI, and AI comes with improved efficiency. It comes with, ease to even create new products and all of that. So I think that technology will shape how, the fintech space, the asset management space, is the solutions that are delivered going forward. We have taken the front step actually to start to create our products, start to lead with engagement with regulators. And I think that going forward, you'll probably see more fintech asset management solutions in the market. And even traditional players will obviously, embrace more technology.
Right, and do you see AI, making trades for us at some point? Or has it started already?
Well, I would argue that it started, but we already know that the algorithm trades. And there's advancements with codified trading. So I won't be surprised if we have AI enhanced trading in the markets right now. But even if it's not in the market right now, I think it's something that.
But is it okay for AI to make a loss?
Those are the moral questions that stakeholders have to look into actually.
Right.
But yeah, I mean, AI is here to actually enhance and enable productivity and enable innovation.
I guess maybe AI will have to say, still do your own research.
You do need to do your research.
Regardless.
You do need to do your research, yes.
All right, thank you so much. It was great having this conversation with you. Benga Magbebiolaze, MD, Sycamore Investment and Asset Management Limited. Thank you for coming on today.
Thank you very much.